Every success you've had began with a great opportunity. Now, here's another one. Make your next career move with a degree from University of Maryland Global Campus. Choose from more than 125 degree and certificate programs featuring online courses, faster onboarding, and no-cost digital resources in place of most textbooks. Get started on your undergraduate or graduate degree or certificate online. No application fee through May 31st. Learn more at umgc.edu/podcast. Certified to operate by Chev.
Do you dream of early retirement, receiving passive income each month from your rental properties? Make that dream a reality by investing with a team that has helped thousands of investors achieve early retirement through real estate investing. Rent to Retirement offers fully turnkey properties that are newly built or renovated, leased, and professionally managed, allowing you to invest with confidence out of state. They have single-family, multifamily, new build, and syndication opportunities across multiple markets. Rent to Retirement assists investors in learning how to build a comprehensive business plan with the best investment and tax strategies to achieve financial freedom through real estate investing. There's no excuse not to get started in real estate investing when you have the right team and systems already in place. To learn more, visit renttoretirement.com/daily. That's renttoretirement.com/daily. Or call 800-311-6781. That's 800-311-6781 to learn more about how you can get started investing in some of the best cash flow markets today. This is Optimal Finance Daily, episode 2281. 5 Signs That Now is a Good Time to Refinance Your Student Loans by Jolene Latimer with StudentLoanPlanner.com. And I'm your host and personal finance enthusiast, Diana Merriam. Welcome back to Optimal Finance Daily, where I'm here with you each and every day to read from some of the world's best finance blogs. So with that, let's get right to today's article as we optimize your life. 5 Signs That Now is a Good Time to Refinance Your Student Loans by Jolene Latimer with StudentLoanPlanner.com. Whether you're part of the 92% of borrowers with federal student loans or you hold private student loans, refinancing could be a savvy option to reduce your student debt. If you've been wondering whether now is a good time to refinance student loans, here's how to make this timely decision. 5 signs that now might be the best time to refinance student loans. A lot of knowing when to refinance your student loans comes down to your own money reality. Here's how to know if now is the right time for you. Number 1, you plan on working in the private sector long term. If you're working for a private company and are happy in your industry, niche, or role, this could be a stroke in favor of refinancing. If your career path includes the potential of working at a nonprofit in the future, you might want to hold off on refinancing so you don't lose eligibility for student loan forgiveness programs like public service loan forgiveness. Loan forgiveness is a major consideration. Eligible borrowers receive loan forgiveness on their remaining debt balance after making 120 timely payments while working for a qualifying employer. Professionals at 501c3 employers or those who work for the government typically qualify for public service loan forgiveness, but you'll have to confirm that your specific employer is eligible. If you're not sure if it's worth staying in the private sector or switching to a public service loan forgiveness eligible job, use our PSLF calculator to compare different repayment scenarios. Remember, once you refinance, you won't be eligible for PSLF in the future. If you're confident that you'll never qualify for PSLF, then it could be the right time to refinance. If you have doubts, it's time to crunch the numbers. Number 2, you have a solid emergency fund. Saving for an emergency fund is one of the first steps towards financial wellness, but the Federal Reserve statistics show 36% of Americans would struggle with a $400 out-of-pocket emergency. Ideally, it's smart to have 3 to 6 months worth of money saved to cover your expenses, including your loan payments. When you refinance your student loans, your emergency fund becomes crucial. You'll lose federal protections during refinancing, such as access to income-driven repayment plans, or IDR. These repayment options are designed to limit your monthly payments to a small percentage of your discretionary income based on your annual gross income and family size. if you lose part or all of your income, IDR can be a lifesaver. Conversely, a private lender is unlikely to offer a similar plan, so you'll need to rely on your personal savings fund to weather financial hardships and continue making loan payments. Number 3, you earn more money than your student loan balance. If you're earning a substantial annual amount, more than you owe in student loan debt, refinancing your loans to obtain a lower interest rate could save you money. If you have a high income with strong cash flow above your basic living expenses, you might qualify for a lower rate through a private lender than your current rate. By directing extra funds in your budget to repaying the principal of your loan, you can further speed up your repayment process. We surveyed student loan borrowers and found that 85% of borrowers worried about refinancing due to potentially losing their job, facing a recession, or experiencing a life event like having children. To mitigate the risk of refinancing, consider the student loan refinancing ladder strategy. Using this method, you'll start with a longer-term loan and continue refinancing to a lower term as you repay more of the principal. Number 4, you're comfortable losing federal student loan protections. Refinancing student loans is a major commitment. You can't decide you don't like your new private loan and revert back to a federal loan. With federal student loans, you have access to income-driven repayment options and several protections such as forbearance, deferment periods, and loan forgiveness. Not all private lenders offer these same options. That said, many private lenders do offer similar alternatives to the federal programs. For example, although your lender might not offer a deferment period, they might offer a period where you can opt for interest-only payments to reduce your monthly obligations. And although a private lender might not have forbearance options as robust as the government, many do have an option to apply for economic hardship forbearance if you need extra support. If the federal protections for student loan borrowers are deeply valuable to you, now might not be the best time to refinance student loans. But if you think you can make do with the alternatives offered by your private lender of choice, this could nudge you towards refinancing. And number 5, your credit score qualifies you for low interest rates. Qualifying for a lower interest rate is the main reason people choose to refinance their student loans. A lower monthly interest rate frees you up to have more money in your monthly budget. You can direct this extra money towards repaying the principal of your loan. If you have good credit or your credit has improved since you first obtained your student loans, you might qualify for a lower interest rate now. Your credit might have improved, for example, if you're earning more or have repaid other debt. There's also a chance that interest rates are lower now than they were when you first obtained the loan. Even if your credit didn't improve drastically, you might still qualify for a reduced interest rate based on market factors. Sometimes people choose to refinance even if they don't qualify for a major change in their interest rate. Other reasons to refinance student loans could be switching to a servicer with better customer service, seeking a co-signer release if your original lender doesn't offer it, and consolidating several student loans into one monthly student loan payment. Benefits of a student loan refinance. When you refinance a student loan, you obtain a new loan with better terms. Using the funds from the new loan, your refinancing lender repays your original loan and you repay the new loan over time. Typically, you'll want your new loan to have a lower interest rate. You might have decided to refinance to release a cosigner or reduce your monthly payments by opting for a longer term. Those are the advantages to refinancing, but there's also a big disadvantage to consider. When you refinance federal student loans, you'll lose any federal protections and perks such as forbearance, income-driven repayment, and loan forgiveness. Even after factoring in that drawback, many borrowers still opt to refinance their loans based on their personal financial situation. The bottom line: refinancing your loans is an incredibly personal choice. A lot of it has to do with how secure your current financial reality is, how much you earn, and what risk level you're comfortable with. You just listened to the post titled 5 Signs That Now is a Good Time to Refinance Your Student Loans by Jolene Latimer with StudentLoanPlanner.com.
I'm General Manager Ethan Rosignol at Dark Horse Toyota in Silver Spring. Having trouble finding a car? come to Dark Horse Toyota in Silver Spring. Dark Horse Toyota is the Central Atlantic region's #1 Toyota dealer year after year. We are here to help you with all your car buying needs. Take advantage of our large inventory and pricing. Come visit us at Dark Horse Toyota in Silver Spring or online at darkhorsetoyota.com.
It's tricky to determine if refinancing student loans is a good idea. And as mentioned in this article, it really depends on your personal situation. My friend Travis Hornsby, who founded the Student Loan Planner, taught me that there are really only 2 ways to address student loan debt: aggressively pay it off, or pay as little as possible and use every trick in the book to maximize forgiveness. Student loan debt is much more complicated than things like credit card debt. And to complicate things even further, it's hard to determine the best strategy when it's not clear what will happen with the Biden administration's student loan debt relief programs. Many of these initiatives have been blocked, delayed, or faced challenges, which has resulted in tons of uncertainty for many borrowers. The plan that was announced last year, which could cancel up to $20,000 for millions of borrowers, was blocked by federal courts. The ongoing extension of the student loan pause looks unlikely to continue. If you find yourself confused on how to navigate all the uncertainty, I highly recommend signing up for the Student Loan Planner newsletter. Travis has his finger on the pulse of all things student loan debt, and he provides in-depth analysis on everything happening with the debt relief programs and what it might mean for you. He has personally advised on over $1 billion of student loan debt, so the man knows his stuff. But I think that'll do it for today. Hope you're having a great day. Thank you for being here, and I'll see you on tomorrow's episode, where your optimal life awaits.